The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to focus here on the German DAX and the FTSE like we usually do. And as you can see, they were pulled upward last night and this morning. And this was actually being done in Asia, folks. This is not what was happening in our market. I know we opened slightly higher in the S&P and the NASDAQ, and then we took off. But the real action was happening over in Asia. Shanghai was up 5%. And let's just take a quick look here at the let's get this up here so we can see it, because it's important for what's going on in the world. It's my guess, folks. Remember, I'm just looking at charts. I don't know diddly squat about the politics and the other stuff, and I don't really want to. So let's take a quick look here. You'll see here. This is the get this up here. This is the Hong Kong index as of Friday. You can see here that we had a really strong day on Friday. It was up about 2.5%. And last night it gapped up. And let me just show you where we were. And this will get us back to where we were with the patterns anyway, because that's what I wanted to talk about. This will be the pattern for the Hong Kong index. You'll notice that we made a 78% retracement back in March the 23rd. That was nearly exact, and then we've had this big move. It's completing an ABCD up in here as we speak today, up at 26,000, really close to 27,000. So that's an ABCD pattern completing. But it's important to remember, look at that. There was a double ABCD pattern there at 21,500. And I remember chatting with some of my Hong Kong friends, and they were really scared. And I said, gee, I don't know. This thing looks like it wants to bottom. And it certainly has, and it's had one heck of a rally so far. So that's actually the good part. At least they're not throwing Molotov cocktails over there now, which is a good thing, I guess. So we'll see what's going on. What's happening in the world is not a fun thing to listen to, but unfortunately, this is the way cycles go. And when this cycle ends, it's going to be a real belly buster. I can tell you that right now. People have asked me, how do I describe what's going on, folks? This is nothing like what happened in 2000 with the dot-com bubble. That was a true bubble, because these companies they didn't even have any sales, and they would open 30, 40, and 50% higher. You had to be there to really see it. And remember, the market in January of that year, the Dow Jones topped, or in early January of that year. The NASDAQ didn't top until 4.5 months later in March the 24th. So that's the main thing. By the way, we have an interesting anniversary date, folks. July the 5th of 1932, the Dow Jones printed, I believe, 41 and change. Mr. Basil Chapman has that information. It was either $41 or $42 on July 5th of 1932. So if you like anniversary dates and do the things that Mr. Gann did, then you might have an interest in that date. And we have the lunar eclipse, and the full moon occurred last night, which is interesting. Sometimes these things happen, but who knows? Okay, now Mr. Z is talking a little bit about the natural gas. We are watching natural gas very, very closely. Those of you that were watching the show last week, we talked about the first ABCD correction. This was a 15-minute chart. You can see that happened on July 1st, last Wednesday. And now we've gone up and we've hit 188. We're getting up near a big daily ABCD there, so it's hard to buy. Now, the reason why the strength today, folks, is none other than the Oracle of Omaha has decided to go into natural gas. So that's the reason why just looking at it. You'll probably find out that he was buying natural gas a long time ago, but he just told everybody about it over the weekend. It's very nice of him to do that after it's 30 cents higher, but I still think this has got a long way to go. We've looked at that quite a bit. I've had several requests about the grain markets. We're seeing the same thing in the grain markets. We've had a major bottom in the grains. The report that came out through our good friend, Mr. Rich Anderson, it suggested that these things are going to be higher, and they certainly are. But this is the time where you want to be looking to be a buyer of the corn, wheat, and beans. So watch for a nice little sell-off, much like we had in the natural gas. These markets repeat over and over again, and they do it with a repetition that you can set your watch by, and that's what they're good for. They don't always work, but when they do, you have to be able to pay attention to it. Last night, the S&P went up to the 78% level at that 3170 level. It broke down to 3156, and then it came back and took it out again. It means that is still going higher. I will give you my 2 cents worth, what I think is happening into the market. And folks, believe me, if you pay more than 2 cents, you've overpaid. So I'll just get this up here and bring this up here so you can take a quick look at it. This happens to be the NASDAQ. I did this about, probably 15 minutes ago, right before the show started. I'll get this up here so you can take a look at it. I thought, you see that D point over there? I thought that hit Friday, folks, and we dropped 100 handles. We went from 105 and change all the way down to 103 and change, and now we've come back and we're testing. It looks like it's going to make 106.30 or something, 10,630, what it looks like. I might have missed that last little ABCD pattern in there. Folks, this is a 3 drive to a top pattern. The 1.618 expansion in that is right at 10,660, I believe, something like that. But that is a 3 drive pattern. I don't know if it's going to work or not, but that is one of my favorite patterns. And believe me, this is and hey, this thing, when it fails, these things can go a lot farther. So it was July the 8th. Thank you, Basil. Darn it. Yeah, I always mess that up. It was July the 8th. 1932. So that's not until Wednesday was when the anniversary occurs, and it was 40.56. Wow. The high was 383 and change. I remember on September the 3rd, 1929. I was trading there at the New York Stock Exchange that day, and if you believe that, I still have 2 shares of the Brooklyn Bridge. Okay, that's what I'm looking at in the market, folks. The FANG stocks, some of those FANG stocks are still looking bearish to me. If you get the newsletter, take a look at those, because they certainly look like they have. They're making these types of tops that we like to see. So that's another thing that we're watching. So that's the main thing. Let's just talk about tops and bottoms. They form pretty much the same way. But let's take a look at when the bottom was made here in the market way back here on March. Let's get this up here. You'll see here, this is a picture of Apple for our chart. You can see the bottom down there, that the bottom day, that was March the 23rd. You had a 3 drive to a bottom pattern, a double ABCD pattern. It's very, very, really very symmetrical, as you can see. And then we're going to take a break here and pay for symmetrical advertising. And then we'll be right back with some more words of wisdom from someone who calls in. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has just launched their July 4th Tiger Dollar sale. For 1 week only, we've doubled all the bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good on all TFNN newsletters, webinars, and trading services and never expire. For all the details and to get your Tiger Dollars before this sale ends Monday, July 6th, visit the front page of TFNN.com today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. Someone's asking me to comment about the coronavirus thing. I know diddly squat about it. I just look at the numbers. And all I know is there's been, 600,000 people die in the world here. And that's out of 7.7 billion or 7.3 billion. That's a very, very low death rate. But if you get it, you're sick. So you got to remember that. So there's a lot of things worse than dying, folks, and poverty happens to be one of them. So dying is quick and it's over fast. Poverty lasts a long time. So let's take a look at a couple of things here that we need to look at in the market. I wanted to talk to you about I posted the chart this morning. I think I did. Let's just double check it, make sure I did. Yes, I did. Oh, yep, I did. I posted a chart of the high yield bond market, HYG. These are the junk bonds. If you'll remember, on June the 14th, just a few short weeks ago, the Federal Reserve says we are going to start buying junk bonds. The next step is they start buying stocks, folks. So remember, June 14th. Now, you notice the market is sharply lower than it was on June 14th. Just the thought of them buying bonds at June 14th caused the market to rally. So the Fed's out there. We have to pay attention to it. That's why you follow the patterns, the news, the rest of it. You just got to forget about it and don't watch it. You'll be much better off if you're following the news. One of the big indicators that I'm watching, and I think it's important because John Murphy talked about it for 2 weeks in a row. On this day, 1948, your bride was, very, very happy birthday to Lynn Marshall. Give her our best regards. That's very good. Thank you for bringing. We were driving by Guadalajara yesterday on our way back from the market, and it was open, but there were only like 3 cars there, so people are getting a little scaring off here. Let's take a quick look here at this a chart of the Dow Jones transportations and the airlines. The airlines is the one in red, and the other, the transportations is in black. It's lagging the market by quite a bit, as you can see. As you can imagine, transportation is getting to be a little tough with the airlines, flying at 1/3 capacity and stuff like that. So it's tough. The family members just went to Hong Kong, and the boys and the dad went. The 6-year-old and the 7 and 9-year-old went to Hong Kong, and they have to be quarantined for a month. Shut up, Larry. 2 weeks once they get there. And so they go they get a really nice hotel, folks, for $30 a night U.S. So that's a heck of a deal in Hong Kong, but the hotel's pretty much empty anyway. And but the airfare was about twice normal. But anyway, this is what we're looking at. We're in a different type of environment. This is going to keep going on, and tell you folks, it's probably going to get a lot worse. My guess is in the wintertime when people usually get flu. So that's what's happening. Whether we have a vaccine, and I don't even know if the vaccine will work or not, that's neither here nor there. But I just watch the death rates. You hear things in the news about Tucson being bad. We live next door to one of the nurses at the hospital, and she does tell us that they are filling up, but they're not dying nearly as much as the people are telling us. But that's Tucson. Phoenix is larger, and that's happening more. If you get older like me, that's where you have to worry about it. Because every time I walk outside, people run away from me. Well, they've done that for years, so I didn't know anything wrong with me. Who knows? Okay, let's take a look at one of the other things that we like to be following each day, which is a really fun thing to trade, and that's this gold market, where this gold is starting to act bullish, folks. It really is. Well, it's been acting bullish for a while. You notice we made the big ABCD up there at 1808 on July the 1st, and we came down, made a perfect 78% retracement on the 2nd, which came in at 1766. Last night we made a perfect ABCD at the 50% retracement at 1779, and now we rallied up $16 an ounce. We're getting close to the 1799 level, which is the 78% retracement and also the ABCD pattern. So 1800 is going to be the key level to looking at right here. So we'll see whether this is going to be, if it gets much above 1808, folks, if you'll check the newsletter, you'll see that there's a couple of targets up there at 1820 and 1840. And believe me, folks, when you're at 1820 and 1840, you're only $100 away from the old high at 1931, which was on August the 11th of, in August of 2011. So this easily could, if we can get gold much above that, be looking at $2,000 gold without any trouble at all. And believe me, above 2,000, it's rarefied air. So you could see 2,500 or something even crazy if something goes really wacko with these things. So who knows? Remember that man who owns the gold makes the rules. That used to be a little wooden plaque that was on our refrigerator. I've been lucky with gold. I've been lucky with everything in my life. So I guess gold happens to be just one of them. So, I will have to show you the Father's Day present that I got from my kids. I think you'll all get a big kick out of it. I'll bring it up here so you can take a quick look at it. For the nice price of $97, you got this nice little bookcase that has a trap door that swings down into a little place to hide your guns, but who knows? Actually, folks, that was sent to me by someone. I didn't get that as my gift. My gift was a Father's Day card, like it always is. Okay, let's move on to a couple of the markets that someone's asked me about. I've talked about that high-grade bonds. I'm watching that because, folks, I don't want to get on my soapbox, but let's move on to another. Folks, when I do these things, and that's one of the reasons why I like people to call in, because, I know you get tired of looking at the patterns. So that's the main thing to be watching. I've had several requests to talk about the grain markets this morning, and I really believe that we're reaching a little top up in here in the corn and beans. The weather has started to look a little dicey up there. That's one of the reasons why we got this nice run in the beans. Let's just put up the the futures, so you'll be able to see where we are. We'll put up November beans, so you'll be able to see them. But I think this is where we are. This is where we were as of Friday, and we're about 6 or 7 cents higher tonight. That doesn't quite make the D level up there at 912. I believe we're trading at 906, 908. That was the last time I checked. I'll be looking for a retracement there. As you can see, that ABCD, that's what I'm going to be looking for. Hopefully, it'll be at a 382 level and take about 4 or 5 days to complete. Then I think you'll have a chance to to get in the beans, because I think these things have a chance to go. I believe we're going to be looking at higher food costs, folks, down the road. And always, keep an eye out on these hogs, because August hogs are trading below the cost of production down there at 4,900. So that's another one. If you're in the not in the farming business, you want to nibble at the hogs, it's a lot easier to buy them at the Chicago Mercantile Exchange than it is to be a hog farmer, because hog farmer is really expensive. Those piggies have to be kept very, very clean, or they run into a lot of problems with disease, as we already know. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. So far, that 78% retracement level on the daily chart and the S&P has held. That was at 13,000. 3,170. We got as high as 3,170.6 or 0.5, and now we're trading below that at 31.64. So that number is still in effect. The Nasdaq did not make a new high yet. Since we did last night, we got up to 10,500. Well, I'm not used to these numbers, folks. Remember, 10,500. When the market topped in 2000 in March, it was at 5,000. Not quite 5,000. It was like 49.98 because it was on the cover of Time magazine, Nasdaq 5,000. In fact, I think it was on 3 of the Nasdaq. It was on the Business Week, Time magazine, and something else. I think it might have been, I don't know what the other one was, but there were 3 of them there that were lining up that way. So watch the price of 3,170. If we start closing above that on any 15-minute or 30-minute bar, that tells you probably going to go higher. And on the downside, if we get below 3150, that would tell us that maybe that top came in last night, and we'll be able to see. But watch the shorter-term pattern, folks. You get some really nice patterns in there where you don't have to risk an arm and a leg. That's another one that you want to pay close attention to. Also, if you're following the currencies, the dollar index did something really. Let's just double-check to make sure it's still doing what I thought it was doing. As I was watching it last night, it made a lower low by 1 tick in here, and now we've broken down to that support. Let's just get it up here. You'll be able to see this. We're at really important support here in this dollar index, and if we break much below that 96 level, we're going to be looking at weakness in the U.S. dollar, and that is going to be very, very interesting. But we're at major support down here, folks, at this 96.64 level, and it has a chance to breaking it. And the reason why, folks, you notice the last rally that lasted 3 weeks only made a 382 retracement, just like it did back in May. Those rallies were almost exactly equal in time and price. So this is telling you that U.S. dollar could get into big trouble in here. And we have the euro trading right now at 1.3355, and if we get it much above 1.4, it's going to be looking like it's going to be something pretty dramatic to take a look at. So just keep in mind that U.S. dollar index has got to stay above that 9,600 level. Otherwise, you're going to be looking at strength in the euro and some of these other currencies against the U.S. dollar, and that makes sense with everything else that's going on because all the things are going. In fact, the beeper is going off right now in the euro because we're at a major number up here and a big ABCD. So keep an eye on that one as we go through. Okay, we got gold rallying up here. We're up almost to that 1,800 level. We're at 1798, pretty close. In fact, we just hit it just a second ago, and we should get up to 1,800, 1,801 very, very shortly, and then we'll see how that is going to unfold. We'll just watch this just to see what's going to happen today, just for kicks and giggles. Put this up here to let the folks take a quick look at it. Hold on just 1 second here. Uh-oh, what did I do wrong here, cowboy? Hold on just a second. I almost hit the wrong button. There we go. There, we'll get it up here so you can take a look at it. So watch that gold up around that 1,800, 1,805 level. Could be interesting here, especially in the next 30 minutes or so. We had a nice little rally here in the NASDAQ since we were talking. We just rallied about 25 pips, 25 points. The S&P is still down in that same ballpark, so we'll watch to see how these are going. The key levels, folks, these are Fibonacci levels. Watch that level at 3170. If we start getting above that on a closing basis, that's telling us this thing wants to go higher. And if it doesn't do that, then, we're most probably heading lower, especially if you get below 3056. Anytime these markets open up 300 points in the Dow and 40 points in the S&P and 100 and some points in the NASDAQ, people are looking to book profits because that's an overnight, birthday present for everybody. So I think that's an important thing, to remember as we're going through. Let me quickly check to see how the grains are acting today. Because because I really want to be a buyer of the November beans here, but I don't want to buy them. I'm looking to be a seller today if they act the way I think they're going to act. So just give me 1 second to get these up here, and hopefully we'll be able to take a quick look at it. That's the corn. Where are the beans? Come on, beans, where are you? Here we go. Let's get these up here so we can take a quick look at the soybeans. Not yet. They have not. Hold on a second. 1 second, folks. I have a little tiny technical difficulty. I've got to get these. There we are. We did it. We hit 912. That was the number I was looking at in the November beans. That's a 61% retracement. So that was the same pattern that I just posted just a little while ago. That just made that 912 number. Let's just get up here and see if it's going to do it. Oh, there we go. Be able to see some of these. Sometimes these things work pretty good. You don't have to risk much here. That's the best part. Anyway, we did get to 912. The stop's got to be above the 1618. So you got to risk about 4 cents. We're trading a 10 or 2 cents lower than that right now, but that's still a little early in the morning. But we'll watch it as we go through here. We're trading at 911. The high has been 912. And so we'll see how that's going to work out. Okay, now the weather has started to be a little bit more beneficial to the to these things here for the grains, especially corn and stuff. So we're getting a nice rally. We've had a nice 35-cent rally in corn. I know some of you folks were able to get in on that. I missed my buy point by about 6 cents, so I was left standing at the church again. And so that happens a lot, but that's neither here nor there. All right, we got the S&P trading at 3162. We're now down 8 handles from the 78% level. So that's an interesting one to keep an eye on. But see, the other ones that are really important, this NASDAQ, folks, at 10,600 and change, that's a perfect pattern. I don't know if it's going to work or not, but my goodness, that's what I thought happened Friday. And yet, we'll see what happened. It exploded to the upside. And that was mainly because of Asia. It had nothing to do with Europe. You can see Europe didn't do anything compared to what Asia did. 5% in the Shanghai. I mean, maybe that's pretty good considering that they didn't even have not much of a virus over there in China compared to what we have here and the rest of the world. So it was a nice gift we got, whoever gave it to us. We'll see. So that's it. Someone's asked me another question about the natural gas. Folks, we've rallied 30 cents from the bottom, from 151 to 188. So you've got to wait for a retracement. And if you want to buy strength in here, you certainly can do it. But if you do that, you've got to be able to say, okay, where am I going to be wrong? What if it reverses on me? And that's the whole key, because, we had a beautiful ABCD buy down there at the 167 level. That was a 50% retracement, a nice ABCD pattern. It never took out that low of July the 1st, and that ABCD structure, let's just get it up here again. Just to do the math, you'll be able to see what the high should be. Take a quick look at this. If you go from 178 to 176, you add 166, you add those together. That means if you go from 52 to 70, it went exactly to the ABCD. So pay attention. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has just launched their July 4th Tiger Dollar sale. For 1 week only, we've doubled all the bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good on all TFNN newsletters, webinars, and trading services and never expire. For all the details and to get your Tiger Dollars before this sale ends Monday, July 6th, visit the front page of TFNN.com today.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I posted a 15-minute chart of the Dow Jones. You can see there is a potential three-drive pattern that is formed. We've sold off a little bit, 100 points or so, a little more than that in the Dow Jones. So unless we get above 26,200, that would still be in effect. Now, the NASDAQ is still near the high of 15,000. We're trading at roughly 10,500. So it'll probably be at 15,000 soon. So just write that down on a piece of paper. So keep in mind that that number we're looking at in the NASDAQ is for 10,666, the old devil may care index that we watch. We're still looking at possible 1801 in the gold, 1802. And the S&P is now dropped down to 3158. Remember the number we're looking at 31. If we get below that 3156, that would be the first sign that 78% level at 3170 has held. So we'll keep an eye on that one too. The Dow is actually the weakest so far this morning, and the NASDAQ continues to be the strongest. That's mainly because of the FANG stocks that are there, and they're certainly bullish no matter way you look at them. But there's some big ABCD patterns in these FANG stocks that you ought to pay attention to, folks. This is one that has been I thought was going to make a beautiful three. Here's one. Let me get this up here. This is a three-drive pattern in the Netflix, but it's not perfectly symmetrical, and that's what we have in the NASDAQ is we have a perfect symmetrical one. This isn't nearly as perfect here in the Netflix, but that's neither here nor there. Let's take a look at another one. Look at Amazon, because that's a big one. It's trading above 2,900 again. So that is a better three-drive pattern, and we haven't quite made the top yet, I guess, because we're at 29 and change this morning. But these are the types of patterns that turn the market, folks. And I know a little bit about, and I'm talking very little, about these markets as far as lunar things. And whenever you get this lunar eclipse, which usually is negative, and the full moon like we had yesterday, that's usually something that is important. And remember, we have this anniversary date, July 8th, which is the bottom of the market in 1932 when the Dow traded below 41 from a high of 383. Folks, it went from 383 in September of 1929. We went down 2 years. actually 3 years into 1932 July, and we didn't take those prices from 383. We didn't take those prices from 1922 out for 30 years. I believe it was 1955 when we first went above those levels. Basil will have that at the tip of his tongue. I don't particularly, but I remember it was close to 30 years, around 20. It was. I believe it was 1955. It could have been 1965. It might have been. Yeah, it could have been 1965, because I think it was, because I was out of college and I was in graduate school. That's how I remember it. But Basil will have that at the tip of his tongue. I have those dates, but not right off the bat, and I have to wait and see. Let's take a quick look here how these markets are coming, because we got some orders in here. We're almost to the 1800 level in the gold. That's going to be an interesting one to pay very, very close attention to, and we're at 3162 here in the S&P. We're looking at this when we get below that 3156. If we do, that would be the first sign that there might be a correction coming here in the market, but it's still a tad early to say anything. The crude oil we're trading at 40.37. We had a high last night, just at around the $41 level, and we just completed a little ABCD pattern here in the crude oil. We should get a little bit of a rally, and then more to the downside is what would probably be expecting here in the crude oil if all things are equal, and we never know if they are or not. So that's it. We got the NASDAQ still near that 10,500 level. We need a quick 100 and some points up at 10,666. That would be a bell ringer for me, and we'll see whether that's going to be the case. Remember, we broke 140 points from the handle that we made on Friday at 10,460. We went all the way down to 10,320, and then of course we rallied up. The big gap up last night, folks, was because of what happened in Asia. I already pointed that out to you, because of the fact that Hong Kong was so strong, and that was very apparent because of that Hong Kong chart on the weekly, and then also on the daily, that they were already ready to buy, and all they needed was a little bit of help from Shanghai, and that's what started the whole thing. And then it's continued on in Europe with the DAX and the FTSE rallying a little bit, and of course we've had a pretty good rally here today. So those are a few things that we're keeping in mind. We've got the British pound up near that 125 level, folks, again. And if we can clear this British pound above the 126 level, it could have some pretty good legs itself. Let's just get this up here so you'll be able to see what's happened with this, because this has been a really good pattern that completed here at the 78% level, and we're really starting to move here. So that's it. Okay, here's the answer we had. March of 1966. There you go. We went above 1,000 in the Dow Jones. I remember that because it stayed there. We stayed there from 66 through all the way through 78. I don't think it broke above that until it was in 1981 or 82, wasn't it, Basil, that we broke out above 1,000 in the S&P to. I'm thinking of the S&P. That was at 100. The Dow was at 1,000. Yes, that's right. But the S&P was trading at 103 when I first started trading down there in 1982. April of 82 is when the first trade was, April 16th, and I believe it was 103. And the futures were trading at a big discount to the cash. And it stayed that way for several years, but that's neither here today. Anyway, get back to that British pound. You can see that nice 78% level we had there at that 122. We rallied now. We're up to 125, and we could continue to go higher here, because if we can get it above this 126 level, which is a 61% retracement, this could have some pretty good legs. It all depends on this dollar index, folks. If this dollar index collapses, you're going to be looking at some really serious pressure on the U.S. dollar, and that means a euro would go substantially more above the 114 level. That's the main thing to pay attention to here, because we're trading at 113.62 here in the euro. The ABCD came in at 113.58, so we're 5 pips above that. So We're near the 1.618 expansion. It's 113.72, but that's neither here nor there. We've got the S&P trading at 3163. Remember, the key levels are 3170 on the upside, and on the downside, 3156. 3156 is just new lows. That'll trigger a few stops, and from there, that's the main one to pay attention to. We're getting still close to that 1800 level in the old yellow metal, the gold. We'll see how that holds up. And we'll move on to the next one that we want to talk about, which is the natural gas. We're trading at 1.826. Let's check the soybeans and see what's happening over there. Just give me 1 second here to take a look at the old beans, and we'll be right back. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we got the S&P trading at 3164. The key level's 3170, and we need to close above 3170 on a 15-minute bar. That would tell us it's breaking out to the upside. On the downside, 3156 is going to be an interesting one to take a look at. We've rallied just about 110 points in the Dow over the past 10 or 15 minutes, which is a good sign. The NASDAQ is still trading near 10,500. The number we're looking at there is 10,666. And we'll see whether that holds up. We're still trying to see if we can get gold at $1,800 an ounce. That would be a nice 78% retracement. And so we want to pay very, very close attention to that. So pay attention to these, because when they happen, and they do happen occasionally, they do work some of the time, but not all the time. So make sure that you use a stop. We're very close to new highs on the NASDAQ now. We're just about, we're there. We're going to be busting through here. So watch this run here. If we get it out, we just made new highs now, the NASDAQ. We need this puppy to get up here around that 10,666. And if you're going to do that one, what you have to do is you've got to risk about 50 pips, folks. You've got to risk about $1,000 in that one, because it moves so much that you've got to put a little bit of risk on it to see if it's. You can risk less if you like, but watch that 10,666. That's going to be an interesting one, because that would complete that big pattern that we've looked at here. We're now at 3168 now in the S&P, and that'll be an interesting one. Remember, it's got to close above the 3170 level here pretty closely. This is very interesting here. Let's just take a quick look here as a quick peek here. Maybe this will work this time. Sometimes they work, sometimes they don't. We'll have to see here. But here is the forecast for the S&P, and we're coming into one of these interesting times here. So that'll be interesting to pay attention to. Folks, have a wonderful day. Live every day in an attitude of gratitude, and may God bless. And please help your neighbors, especially the elderly. Raise your hand. Hey, see you all on the flip side tomorrow, folks. David Paul will be our guest.